Well, there's the headline, folks. Over the last year or so, values in Wellington are down a bit, but we have seen a bit of an uptick in February, so that's encouraging. At the same time, it's, by other measures, it remains a really tough market. We see supply continue to increase. You'll see soon that there's more supply on TradeMe than we've seen in Wellington since April 2015. So almost 10 years since we've had more supply than what's on the market at the moment. So obviously that makes it challenging for sellers. Obviously you want to sell, you're competing with a lot of other property on the market to attract the interest of the buyers that are out there. Conversely, for buyers, it's an amazing opportunity. There is enormous choice out there. And so I encourage buyers who are out there looking to make the most of these fantastic buying conditions. More choice and less competition adds up to good buying conditions for you as buyers. So let's look at the detail. Here's the median sale price, $795 in February versus $799 a year ago. So basically flat, down 1% technically. If you look at the shape of that graph there, you can see, as I've been saying for a long time, since about July 2022, we've been roughly going sideways. Bit down, bit up, bit down, and so on, broadly sideways. But of course, this is the median sale price. And if you follow my videos or my commentary, you will know that I don't pay too much attention to the median sale price because it is obviously, as owners or anyone who's a stakeholder in the Wellington property market, what you're really worried about or concerned for is the underlying values and the way underlying values change. And the median sale price reflects, yes, it's influenced by values, but it's also influenced by what is sold in the month. And if they're expensive property sold that month, then it goes up. And if it's cheap property sold that month, it goes down. That doesn't mean values have gone up or down. And so the best guide to that, in my opinion, is the Real Estate Institute House Price Index. So let's look at that. So this is what I would call the league tables. And for a long time now, I've been saying Wellington has the auspicious privilege of leading the league tables in a very bad way, in that Wellington has fallen in value more than any other part of the country. As you can see there, that is still the case compared to the peak, which was October 2021. We are 23% down. We have been as much as 26% down. We recovered a bit. We deteriorated a bit again, and then we've recovered slightly. So 23% down versus October 2021. And Auckland, for example, is 20.5% down, so not far behind us. The rest of the country is definitely further behind us, and overall the country 14.5% down, as you can see there. Over the last year, we are no longer leading the league tables in the last 12 months. So phew, that's a relief. So 3.1% down over the last 12 months. And there's two regions in the country, as you can see there, that beat us, if you like, having fallen further in the last 12 months. 3.7% in Bay of Plenty and 3.6% in Northland. Obviously, the drop they've come down from the peak at 12 and 13%, not nearly the same as what we've had since the peak. But in the last 12 months, we haven't fallen as far as they have. Over the last 3 months, so reasonably recently, that will be December, January, February, we've gained just under 1%. Auckland has been flat, and New Zealand overall 0.5%. So we've sort of recovered a little bit more strongly than most other areas in the country over the last 3 months. Obviously, we're talking very small numbers here at just under 1%. But hey, small gains, we'll take them. There's the shape of the graph since the start of 2021. And you can see there in Wellington, it's interesting, isn't it? Like over the last 5 years, Wellington values have grown on average 2%. That's very little, pretty negligible growth. Over the last month, 1.9%. And I always find it interesting looking at the shape of this graph, the blue line of the monthly results. So the trend is more evident in the orange line, which is a 3-month cumulative result. And so obviously, as we came off the peak, came right down here in early 2022. So just let someone else in. And so we saw really falling values throughout 2022. We recovered then, as I've been saying, since about middle of 2022, and we saw growing values as we headed into the election in 2023 because vendors went on strike, basically, mainly because they saw prices were down and very few people were under financial pressure because we didn't have inflation yet, and no one was losing their jobs yet. And then the election hit, and we had a change of government and a change of policy direction, and a whole lot of vendors decided, okay, time to put the property on the market. I think they sensed that price growth had flattened. We might have been at the end of the boom, which indeed we were, and so we had a ton of property come to market. That resulted in, and at the same time, buyers stepped back because there was really, really fresh concerns over labour market, people losing their jobs and so on. And so, values softened as a result of that. And we saw some recovery middle to late-ish last year. Then it got tough again around October, November, December, and January. And then in February, we've seen this uptick, as you can see here. Excuse me, I'll just let someone else in. So yeah, as I say here, look, some recovery in February after weakness in January and indeed December as well, and after generally a weak 2024. And as you can see there, that's reflected in the minus 3.1%. So a drop in values of 3% in the year, but a recovery in February of nearly 2% across the region. There it is across the different territorial authorities. So general weakness in the last 12 months to varying degrees in the different territorial authorities. And Wellington City has, in general, not fared well. And I mean, interesting there, look at that, Wellington City, 0.9% growth over the last 5 years on average. So it's gone sideways, broadly speaking, over the last 5 years from start to finish at least. So yeah, varying degrees of weakness across the different parts of Wellington over the last 12 months. Over the last 3 months, most locations have recovered a bit, Porirua City being the exception. The narrower the time frame, of course, the more variability we see in the results. So, pay less attention the shorter the time frame gets. And so on that note, we don't look at the 1 month results, but for Wellington City, you can see there, and there's the graph of the Wellington City. So it follows the same broad trend, but we do see it's more erratic because, again, we have a smaller data size, a smaller data set. But generally, we see slightly deeper troughs. We see slightly higher peaks. That will be just because that's the nature of how it goes with a narrowing set of data. The broader the population, the more moderated the results are. But the shape of things overall is broadly the same. And just like the region overall, we have seen a recovery in 2025. In February 2025. Interestingly, 2.6% up for the month of February. That's quite a jump. It's way too early to say that's a new trend, and certainly it doesn't feel like that on the ground. It remains pretty tough out there. So I wouldn't be surprised if we see that come back down again next month. But I wouldn't be surprised by anything, to be fair, except I'd be very surprised if I saw that sustained month on month on month on month. That would be another big boom. So what about supply? This is listings coming to the market. So 939 listings in February versus 927 a year ago, 525 2 years ago. So about the same as 12 months ago, but a massive increase compared to 2 years ago, 79% up on 2 years ago. And again, I find it interesting to look at the overall trend, which is the red line, that is the 6-month moving average. So you can see here, number of new listings. We typically tend to see in a normal market, at least over the last 10 years, between 600 and 800 listings coming to the market on average in a month. We have seen throughout late 2022 and into most of 2023 drop right down to levels which we haven't seen for a very, very long time. So the market really was, during that time, starved of new supply. And that is really what gave the market this firming effect, and supported stopped the price declines and produced some modest price increases during those times. Then after the election, as I said, there's October here, and we saw these massive increases in new supply coming to the market in that period of time. Again, once people realized, oh gosh, perhaps the results are looking soft again. It's proving hard to sell property again. then the amount of listings coming to market declined again, only to have recovered again in the last few months. That, of course, is seasonal. We see these massive increases in January and February as we open the doors for business in the new year. In December, of course, we see very few listings, as is typically the case. And so big January and big February, although February roughly the same as last year. And that is what's normal over the last 10 years or so for February. So not only did we see a strong result in terms of number of listings in February, but it was stronger than what is typical in the last 10 years. So is that good news or bad news? Well, that depends on who you are. If you are a seller, then a lot of new supply coming to market makes it difficult to attract the attention of buyers. So that's not good news. You want less supply coming to market. If you're a buyer, it is fantastic news. A lot of new supply, a lot of new stuff to go and look at the weekend, a lot of choice available for you. Stronger than February norms. And there it is in terms of the number of listings by month compared to 12 months ago. So considerably more than we saw. Sorry, you can't see it there. It looks like it looks like this is the last result, but actually the last result is here, and you can hardly see it because it's only 1% up on a year ago, so it barely registers. So we had a big increase in listings coming to the market in January compared to the prior January, but in February about the same. Number of sales, so this is the other side of the equation. Again, I find it interesting looking at that red line, but in the month of February, 622 sales versus 688 a year ago and 464 2 years ago. So again, a big increase on 2 years ago, not an increase to the same degree compared to 2 years ago as we saw in new supply coming to market. That was 79% up on 2 years ago. We're only 34% up on 2 years ago when it comes to sales. So we've had this massive increase generally in supply coming to market, and we've seen increases in sales, but not to the same degree. And that's why we see the overall swelling of the supply of listings on TradeMe. Obviously, if more is coming to the market and not as much as selling, then the amount will swell. And the difference will be when properties fail to sell and the vendor just says, right, that's it, I give up, taking it off the market, and I'm going to stay here or I'm going to rent it, and so on. But 10% down on a year ago. And again, if we look at the trend in that red line, I find that interesting. Typically, again, we see 600 to 800 properties sell in a month, typically. In recent years, we've seen a real dry spell since early-ish 2022. We saw sales volumes really starting to fall back since late 2020, which was the end of COVID year, of course. We saw activity levels really start to slow down middle of 2021, peak prices late 2021 in October, but you can see there that the volume of sales started dropping away before October 2021 when prices peaked. They were gradually coming down, and then they really steeply fell, the number of sales from that time. Plateaued at around the 500 mark for quite some time during 2022, 2023. Then in 2023, starting to see gradual increases. And we've seen overall, with some variability, gradual increases in number of deals getting done, number of sales taking place. It has been pretty gradual, but it has been relatively consistent. Over the last 6 or 8 months, it seems to have stabilized at broadly about that 600 mark, as you can see here. So sales volumes have plateaued over recent months, yes. And so we've seen this gradual increase off very, very low bases, even at around 600 a month on average. We are still at the low end of what's normal. As you can see, over the last 10 years, it tends to be 600 to 800. And so we've still got a lot of room to grow before we get back to not sort of normal sale volumes in Wellington. We are still below February norms. So whilst sale volumes have been increasing slowly in the month of February at 622, still, what is that, 15% below the February average of 719. So we're increasing, but still not back up to normal levels. As opposed to new listings coming on, if you remember, we were above February norms for new listings coming to market. So again, this is helping to paint the picture of why we're seeing the supply gross supply volumes available continue to increase. And there it is, the month compared to 12 months ago. New listings. Generally, over the last 12 to 18 months, we've seen more sales, rather not new listings, sales taking place compared to 12 months prior. But in February, it has been less by 10%. How long does it take to sell? Still quite a long time, 45 days compared to a year ago, 40 days. So a bit longer than a year ago. 2 years ago, 49 days. So a bit less than 2 years ago. February average is 39 days over the last 10 years. So 45 is still quite long compared to what's normal. We have seen significantly longer than that over the last 3 years as we have been in this slow period, as you can see from that graph. And again, the red line shows you the trend. So coming into 2022, it started really increasing, reached the sort of high points late 2022, early 2023. Then the vendors went on strike. As I said, duration to sell starts falling right away, which reflects the improving market conditions for sellers as choice dries up and buyers having to compete a bit more. And then from late 2023, again, we saw sale duration increasing as the labour market deteriorated and more stock came to market again. Seems to have plateaued overall over the last 4 or 5 months or so at around that sort of mid to highish 40s. As you can see there, we had a very long duration in January at, what was that, 59 days. Way back here, we reached 69 days. January, unusual month because a lot of the sales that take place in January were listed in November, October, December. And so, yes, they do tend to be longer because you don't have any very, very many new listings coming on in December. So the ones that are sold in January tend to be longer. Inventory, so how many weeks worth of stock is there on the market? 15 weeks, and the long-term average is 15 weeks. By long-term, I can't remember how long that is now, actually. How long is that? It's something like 20 years or something. So that's interesting, isn't it? Because 15 years inventory we saw in February, long-term average is 15 weeks. This is a good barometer of, are we a buyer's market or seller's market? This would suggest we are in an absolutely balanced market. It certainly doesn't feel a balanced market. Then why is it that it's 15 weeks, which is exactly the long-term average? It feels like definitely a buyer's market. And that is because over the last 10 years, the average has been 10 weeks. And so 15 weeks is a lot longer than that. So that goes to show that prior to 2015, if the long-term average has been 15 weeks, and over the last 10 years, the average has been 10 weeks, then the 10 years prior to 2015, the average must have been 20, roughly. And so that was during the really tough market coming out of the GFC. So what we've seen in the last 3 or 4 years is not, it's happened before. Anyway, so you look there at the trend, again, we see the same sort of pattern, a really rapidly deteriorating market as inventory levels skyrocketed from lows of about 5 or 6 weeks in 2021 right up to 21 weeks on average in mid-2022. As I've said, since about July 2022, things have stabilized and we saw inventory levels come down again. And in the last 12, 15 months, we have seen them generally increase again since the election. And there are the listings on TradeMe. And so you see there March, this is of course as of a couple of days ago, 3,420 versus 2,923 a year ago, 2,825 2 years ago. So a decent increase over the same time, both 1 year and 2 years ago. And again, you can see the pattern of things there. Massive increase, plateauing, then a market improving for sellers, then deteriorating for sellers again. And very recently, supply increasing again as we come into summer, which is, of course, January through March, peak selling season, peak listing season. And interestingly, you look there, you can see that the last time we had this level of supply, as by that blue bar chart line there, was way back there in April 2015, when we last saw more supply than what we have on the market today. So, yeah, there's a lot of competition out there. Now, what does that mean if you're a seller? It means that if you want to sell, you have to compete aggressively. It means basically two things. Number one, you need to present your property really well. Compliance problems, significant maintenance issues, your property will get punished. It can still be sold, but it needs to be sold at an appropriate price. And then secondly, of course, is the pricing, and that is that you just can't afford to be unrealistic in this market. And so, yeah, if you are going to sell, those are the keys, given there is so much choice out there for buyers. And of course, the converse is true for buyers. If you're buying out there, then it's just a fantastic time for you. You can go and have a field day, and you've got so much more choice and less competition out there. And there it is compared to 12 months ago. So you can see we are reverting back. The degree to which we have more stock on the market compared to 12 months ago is easing, but we already had quite a lot on in the last year or two, as you can see by that huge boom in 2022. So in summary, folks, values are down generally in compared to 12 months ago, but up in February. Too early to say that's a new trend or not. New listings about the same as 12 months ago, and particularly strong in the exact month of February. Sales volumes are down versus 12 months ago and quite low for February, as in compared to what's normal in February. Duration to sell is still quite long, but not as long as we have seen in some months recently. Inventory is back to long-term normal levels, but still long compared to what's been normal over the last 10 years. TradeMe listings continue to go up, and we currently have more stock than we've seen since April 2015. So there's a ton of supply out there. As I've said many times throughout this call in the last 15 minutes or so, for sellers, yes, values are a bit higher in February, but still lower than a year ago, and it's hard work competing for the attention of buyers out there. So you have to be pretty realistic and present your property well. Buyers, lots to choose from. It's a great time to be a buyer at the moment. Buyers still occasionally ask me, should I wait for prices to fall? My answer is absolutely not. Is it possible they go down? Of course. I think it's highly unlikely they're going to go down by much. We're bumping along the bottom here, so it's a bit up, bit down. How long will it go like this for? I don't know, but don't wait for things to get better. If you see the place you like and you can afford it, go for it. Obviously, thanks to the data suppliers, Real Estate Institute and realestate.co.nz. Okay, folks, well, nice to see you. If you want individual advice, please just reach out. Happy to help anytime. But otherwise, have a nice evening, have a good month, and I hope to see you next time. See ya.